Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 13th of July 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's look at the overnight changes and price moves we need to be aware of. A relatively quiet session overnight on the world's global foreign exchanges. Just going to flag a couple of moves. Sterling giving ground against the US dollar, trading down to 131.7250 shortly before we recorded the video, down by around 0.24%. And the Korean won fighting back against the US dollar with gains of 0.31%. So contrasting fortunes for two export-led countries on either sides of the globe. Dollar index for its part, 94.92, better on the day, up by around 0.12%, but still well below and failing to break through that key 95 level. Okay, what's on the calendar then? Events that may move the markets today. A relatively light calendar. Much of the action's already happened in Asia. We had a speech first thing this morning from FOMC member Neil Kashkari. That was literally at midnight GMT. Ongoing, we have the ECOFIN meeting in Brussels. That's the meeting of European finance ministers, of course. We've had some foreign direct investment data out of China year to date for June. And perhaps the more important data, the trade balance data out of China for June, and we'll look at that in a bit more detail momentarily. To come then at 11 a.m, the second of today's central bank speeches, this from MPC member Cunliffe. Then we have a nice break until 1400 when we get the Michigan Consumer Sentiment Index, highly fancied index, this from the States, and this is for July. We have a Fed monetary policy report of 1500. And then FOMC member Bostic that speaks at 16:30 in the third of the day's central bank speeches. And to finish the week off, as ever, the Baker Hughes US oil rig count. It'll be interesting to see what's happening with US crude production based on that data. Right then, breaking news and comment that's caught my eye overnight. And first of all, China's balance of trade data reflected trade war concerns. While exports from China grew ahead of forecast, it should be said, tariffs on imported goods began to bite, and that meant that import volumes fell into the country. Now, that might not sound like an issue on the face of it, except for the fact that much of what China imports comes in the form of raw materials and component parts, and therefore, whilst it's not an issue immediately, it may start to become an issue going forward in the supply chain and manufacturing chains of the country. Meanwhile, Singapore's GDP growth fell back to 3.8% in Q2 2018, down from 4.4% in the prior quarter, as manufacturing output in the country slowed. Speaking of slowdowns, Japan's industrial production has fallen for the first time in 4 months during May, data shows. A lagging indicator, obviously, this, given that we're looking back to data for May. Nonetheless, it may say something about the sentiment around Japanese economic data and what we might look forward to in leading indicators going out to the balance of the year. Finally, President Trump has said that a soft Brexit will hurt the chances of a UK-US trade deal. That's a big blow to Theresa May, and he also said some other controversial things in an interview with the UK press. Right, food for thought then, something to take away with you into the trading day and beyond. Well, why not think about this? We've spoken many times about emerging markets and the possibility of a full-blown crisis within them. And bankers HSBC have mapped out the roadmap to just as a crisis in a research note that produced in the last couple of days. And we are well down that path now, but a crisis is not yet guaranteed. However, money continues to leave emerging markets in search of safe haven homes. And whilst it's quite a complicated chart, it is worth spending some time looking at the path to where we are now. This is April and May, when the Argentinian peso and the Turkish lira first sold off, so we're somewhere around here now. It may be, in fact, that we don't see a full-blown emerging markets crisis in the style of 1998 or 2001, except this time around we may rather see a sort of death by 1,000 cuts, if I can put it like that, and a slow bleed with maybe one or two economies like Argentina going cab in hand to the IMF, rather than the group as a whole blowing up. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. Thank you for your time. Have a good weekend.